Well, good afternoon. Happy Friday. Mark Milam here, your mortgage professional with Highland Mortgage, coming to you with this week's interest rate summary and market update. If I told you that interest rates were the lowest in the history of the mortgage industry today, you would definitely know that it's April Fool's, because that is not where we are. But I will tell you this, we did have a pretty good week as compared especially to the past 6 or 7 weeks where we've been losing on average 1/4 percentage point each and every week as we've been moving through late winter, early spring. Finally, a bit of a respite so far in late March, early April. We saw the market hold its own this week. Not a lot of degradation to pricing, not a ton of improvement either, but not a lot of degradation. Today, one of the biggest reports that we've gotten all week, the non-farm payrolls report came out. Let me flip the screen around here and I'll walk you through it. Non-farm payrolls came out adding 431 jobs in the prior 30 days. That's against an expectation of 490,000 jobs. So it sounds like a little bit of a miss, that we might have expected more job creation than what we actually got, but that's still a really strong number. 431,000 is still a nice number. As a matter of fact, they also went back and revised the prior 2 months upwards, and that's reflected here in the release. At least one of the months is. You can see they upwardly revised February to a gain of 750,000 jobs. When you go back and look at the 30-day average over the past 90 days, the rolling average, we're averaging about 550,000 jobs per month through the first 3 months of the year. That's pretty strong. That's pretty strong job creation. Unemployment rate dips by a 1/10 of a percentage point in the most recent release. And we're seeing hourly wages coming in right at about expectations, maybe a little bit higher versus expectations on average hourly earnings. All of that just showing a pretty healthy job market. And when we start talking about a healthy job market, we talk about wage increases, a little bit more pressure on inflation, and obviously people have more money to spend. And one of the problems we've got is that there's a lot of people spending money on too few goods. That's what's driving inflation to 40-year highs, and that's where we are today. Just so many factors out there that are influencing mortgage interest rates. But finally found a little bit of footing this week. There's not a ton of rationale behind it, except for maybe just enough bleeding has happened to where we can finally find our resting spot, our plateau for mortgage interest rates, at least for the foreseeable future. A lot will tell the tale in the coming week. We've got the Federal Reserve minutes that are going to be read. I think it's on April the 6th. We'll find out a little bit more insight into the Fed. The market now pricing in a strong probability of a 0.5 point increase to the Fed funds rate in May, potentially the same in June, potentially the same in July. We'll have to see how that plays out, but ultimately it seems like bonds have finally found a little bit of footing. I'll show you what I mean here. Flip the screen around and we'll go take a look at mortgage-backed securities. These are the financial instrument upon which interest rates are based. These are the past 5 business days. So relatively light movement today, yesterday. Day before was pretty good. Tuesday we saw a nice bump up, and this is Monday. So not a bad week overall, and we're seeing interest rates hold their own. One of the products that we're getting a lot of traction on is our lock and shop program, which means you don't necessarily even have to have a property address. We can lock you for up to 90 days. Once you get within 30 days of closing, we can look at floating you down if market rates are lower. Of course, if you have any questions at all, don't hesitate to reach out, mark.milam@highlandmtg.com. Happy April Fool's Day and have a good weekend.